today has been Muthoot Finance after RBI raised the LTV for gold loans. Let's welcome on board George Alexander Muthoot, MD at Muthoot Finance, joining in on the show right now. Mr. Alexander, good to have you on the show. Given this release by the RBI on the direction on gold loan lending, tell me what is your current LTV and how much of your loan portfolio will be impacted because of these new rules?
The new regulations have definitely been softer. It is more, I should say, it is more customer-oriented and customer-centric. And finally, the regulator is trying to help the customers to get more credit availability. So credit for the customer, monetizing their gold, etc., has been made a little more simpler and easier. Now, the current LTV norm says the maximum one we can give is 75% of today's gold price. So if you look at our gold holdings today and the total loans you have given, the LTV will be only 58%. It only means that everybody has not borrowed all the 75%. Even if the price has gone up, people have not borrowed to the hilt. It's not that everybody takes the maximum amount. They take as they need, but as what they need, require. And 75% was the cap now. As per the new regulations, which is going to come in 1st of April 2026, the LTV has been raised to 85% in respect of loans up to, or small loans up to 2.5 lakhs. So it is again the credit call of the individual NBFCs, the risk appetite, etc., whether to give up to 75% or something lesser, because 74% was what we had till now, and it was a good rate. 85%, certainly it is good for the customer, but every individual company has to look at its own risk appetite, its risk control mechanisms, and other factors before deciding on how much to give.
Right. And how much of your loan portfolio is below the 2.5 lakhs and the revised LTV thresholds and associated guidelines? You think they will apply only to gold loans classified as consumption loans? And then how much of your portfolio will get impacted if you've done some numbers?
Yeah, I think our gold loan portfolio below 2.5 lakhs would be in the range of 80 to 85% of the borrowers are below 2.5 lakhs.
All right, Mr. Muthoot, there was a threat earlier that if the earlier draft is implemented, then customers might go back to the unregulated sector. Is this a threat over now, or will these rules lead to some customers shifting here and there?
I think that has definitely been taken care of. I think the shift of customers to the unregulated sector will be much lesser. I think RBI has definitely taken care of that, and I should thank RBI for that. Definitely the Ministry of Finance and the Reserve Bank of India for taking that bold step so that the customers who are very much difficulty they had come, or the NBFCs and banks have brought them to the regulated sector. Now, the threat was of them going back. I don't think it is there now. This has definitely been addressed, and definitely I personally and on behalf of AGLC also thank the regulator and the Ministry of Finance for taking this bold step.
Okay, and if you can tell us, will this now effectively increase the disbursement and LTVs for banks, and what will the consequent impact be? Will it intensify the competitive landscape for gold loan NBFCs because of this?
I've always been saying, as one of the leading NBFCs in the gold loan sector, I've always been saying it is not the competition. The fact is that more and more people are coming forward to pledge their gold and take loans. So it is not that competition. Everybody, in the last 1 year, banks have also increased their portfolio by 50%. We have increased our portfolio by 40%. So everybody is growing. The market is really expanding. It is a market which is expanding. So more and more people, players coming into this, especially the banks, is only expanding the market. It's not that one NBFC or one bank is taking away business from other. It is not a finite amount. The availability of gold ornaments in the country is so huge that not even 20% of the potential has been tapped. So there is a lot of potential. It's only the mindset change. Once people's mindset change and see gold as a smart loan, more and more people come forward to monetize their gold and use the money for productive purpose.
Mr. Muthoot, we can't help but ask you, and we have to ask you about your guidance on the back of these new norms that we've got from the RBI. Any upward revision to your disbursements guidance that you expect due to this new guideline now?
I think there is always a growth potential, growth trajectory, which always happens. I think that will continue because the earlier regulation was a dampener there. Now the dampener is taken away. That dampener in that draft regulation is taken away. Now there will be normal growth in everywhere. It is not that there is going to be huge growth. But then, having said that, lot of news items in the press, in the TV, everywhere is about gold and gold loans, etc. So, as I said earlier, the market, the base is going to increase very much.
Mr. Muthoot, if you could tell us, the Reserve Bank of India also reduced repo rate by 50 basis points and CRR by 100 basis points. How much of an impact will this have on your business and on your financials?
See, as an NBFC, we don't have CRR, etc. But then our working capital or funding comes from the banks. So banks and NCDs are a source of funding. So now, because of this, the availability of funding will be much easier. That is the first part of it. More and more fund will be available for all types of credit, including lending to NBFCs and including lending to NBFCs and gold loan companies. So availability will be better. But the rate cut will come in maybe in 1 or 2 quarters only. By the time it comes, our blended rate, if it comes down, we generally pass it on to customer because we reduce our yield. We maintain only our NIMs and our spread. Our spread of about 9% and NIMs of about 10.5 level is what we usually maintain. If the rate comes down, we'll pass it on to the customer. Yeah, similarly, when the rate went up, we passed it on to customer. So we just maintain our NIMs and our spread.
Okay, well, Mr. Muthoot, I'm going to try my luck again. What about your overall guidance for FY25? Any upward revision to that?
That's a question I always get. We still maintain that the 15% which we did. They'll probably give us 1 or 2 quarters. You'll see our performance, and then we will see what extra guidance we can give. As of this date, I don't want to revise the guidance.
Okay, so that's as far as the guidance is concerned. But Mr. Muthoot, you also have a subsidiary, Belstar Microfinance. RBI has revised NBFC microfin companies' qualifying assets to be minimum 60% of their total assets versus 75% earlier. How do you see this move for the entire sector and for your subsidiary in particular?
So I think overall, I'm not sure about what is the thought behind the regulations change. But what I see as positive in this is that, see, the microfinance sector, what they lend is 100% unsecured. It is actually to the poorest of poor people, very unsecured, and it's definitely a very risky loan. But then to maintain the health of the NBFCs, I think increasing the non-microfinance percentage from 25 to 40% is certainly in the right direction, and they can think of giving some more little better loans or even some secured loans in this 40%, so that the blend of risk is reduced. The blend of risky and non-risky is reduced. I think that's again a positive direction. And I read the governor saying that microfinance also will face some pains in the next 2 quarters. After that, things should stabilize. That is what the response I heard from the governor. So I am sure after two quarters, things should stabilize. And the 40% non-MFI is definitely a step in the right direction, which will improve the health and the health of the microfinance NBFCs.
Okay, Mr. Muthoot, point taken. We appreciate you being so candid and joining us on the show today. On that note, we'll let